Okay, good afternoon, everybody, and welcome to Compassionate Enforcement, webinar brought to you by Credit Today and CIVEA, supported by CCS. This session is part of the Keep Britain Solvent series, where we aim to help drive policy to reduce or preferably eliminate any unnecessary personal and corporate insolvencies post-lockdown. We all know that local authorities have been hit hard by dips in income stream in the last 20 or so months, while consumers have also been hit by restrictions, basically in their ability to operate as economic agents. As normality, hopefully, fingers crossed, starts to return, how can we enforce moving forward with compassion, humanity, and of course, the enduring professionalism of the sector? There's a lot going on in the enforcement industry right now, so let's crack on. We will produce a short report after the event, which will take on board all comments. If you want to speak or contribute, please use the chat strip down the side, or raise your hand if you want to do that. If we can't answer all the questions on the day, and we've got about 300 people here right now, and we will try our very best to get back after the event and pick up strands thereafter. So without any further ado, let me hand you over to my co-chair for the session, Russell Hamblin-Boone, who is CEO of the Civil Enforcement Agency, also known as CIVEA. Russell.
Russell, you're mute.
Rookie error.
Take two. Oh, crumbs.
Thanks, Gerald, and thanks to everybody for joining. Really appreciate your involvement in this discussion. Before I introduce the panel, I just wanted to sort of introduce the event. Really, the idea is that this is a thought leadership exercise, that we're kicking off this debate that we need to have about how we go about recovering central and local government arrears post-COVID, in a post-COVID environment where many people's circumstances have changed. We know already that despite the excellent collection rates of councils, actually there was £4.4 billion in arrears to councils as over the last few years, that an additional £847 million of debt has been added last year, and that there's about £9 billion worth of costs that councils need to absorb from measures that have been implemented as a result of COVID. So we're talking about massive figures. And it's timely that the Select Committee for Housing, Communities and Local Government last week launched its inquiry into council tax collection, because I think it's really important that we start to think differently and reimagine how we do public debt collection. And this is the Select Committee inquiry is a good opportunity to be able to feed in ideas to significant and influential individuals across the political spectrum. At the same time, as Steve will probably mention, we've got the Cabinet Office call for evidence on public debt collection, and Steve's looking at how he can work with local authorities to support their collection activities. Hopefully he'll be able to tell us what the timescale is for the response to the call for evidence that I'm sure we've all contributed to. And then from an industry point of view, we've got next year the launch of the Enforcement Conduct Authority, when the enforcement sector will come under scrutiny in a way that it hasn't had in the past. We very much welcome that, helping to drive up standards, but also perhaps adding to that policy debate with some new thoughts and ideas of how we approach these difficult issues in a post-COVID environment. So it's hopefully a timely debate. Hopefully it's starting that conversation that we all need to have, recognizing that what's gone on in the past is probably not fit for purpose when we look at the implications of the post-COVID environment. So that's just some context to it. If I just introduce the panel now. I'm really pleased that we've got some really good quality speakers, all of whom are going to have a few minutes to share their thoughts on this debate before we get into the Q&A session. So we've got Steve Coppard, who's Deputy Director of Government Debt Management Function at the Cabinet Office. We've got Paul Bowden, many of you will know as a partner at Wilkins Chapman. Ed Moore is Head of Social Value and Customer Welfare for Equita, Ross and Roberts and Sterling Park. And Charlotte Akert is Income Operations Manager for Southwark Council. So a huge wealth of experience and a range of different experiences brought together in this panel. So I'm not going to talk anymore because this is the panel's expertise that we want to hear from. So should we start? Steve, should we? I'll introduce you first. Is that the order we agreed on? I've forgotten my order. I know it's Paul first. Paul.
Thanks, Russell. Good afternoon, everybody. Sorry, I'm getting feedback there. Can I just have an indicator that people can hear me? Is it? It's coming through.
Yeah, it's fine, Paul.
Fine, good, thank you. Yes, thanks, Russell. So for those who don't know me, my name's Paul Bowden. I'm a partner with Wilkins Chapman Solicitors. We're also insolvency practitioners, and I head up our local government credit services team. And that offers a solution to local government clients from a legal and an insolvency context, and it supports clients through scenarios that they choose to be involved with through active enforcement, and where they may not choose to be involved with, and they're involved as a reactive process. We currently work with around 100 councils up and down England and Wales. And just to put that into context, I've just been having a look at our last 10 years, and through our firm, we've collected just over £61 million worth of debt through our offerings, and that's covered over 25,000 cases, and they're all cases typically that will have been through prior enforcement. So back-end solution looking at collections there. For me today, and for me generally, it's all about balance. My own personal view is that local authorities are running, like or loathe, probably one of the most effective collection tools in Europe in terms of a process. And largely there will be quite high percentages of people that pay. A lot of them will pay on direct debit. And what we have is quite a small percentage of people, probably 5 to 10% for most councils, where you've got both extremes of the spectrum. You've got your most vulnerable and you've got your most evasive who probably have the means to pay. So it's key for me to find a balance where we have something in place to protect the vulnerable, but also don't end up in a toothless tiger situation where we can't do anything for those people who have the means and are choosing not to pay. So balance is the big thing for me.
Thanks, Paul. Appreciate that. Ed, would you like to share your views?
Yeah, hi, good afternoon. Again, for those of you that don't know me, my name's Ed Moore, Head of Social Value and Customer Welfare for Equita, Ross and Roberts and Sterling Park, who are based in Scotland. So that's 3 enforcement agencies which make up a part of Capita. I've been in this role for about 3.5 years, predominantly looking after and looking at our processes for how we identify and manage vulnerable customers. Obviously, that has escalated and snowballed considerably. Looking over the 3 different companies which I monitor, there's the one thing which is in common is those vulnerable customers and how we identify them better. Again, echoing Paul's words, you know, the local authorities, they collect large amounts, and what isn't collected, though, still equates to a huge amount of money, which, if it's right and ethical to do so, then we should be collecting it on those local authorities' behalf, and it's down to us. You know, we're employed to find out the most efficient and most effective way of doing that without causing any detriment to those individuals that we're working with.
Thanks very much, Ed. Charlotte.
Hi, so I'm Charlotte Akert, Income Operations Manager at Southwark Council. Within Southwark Council, we have a single view of debt for our income areas. So we cover council tax and business rates arrears collection, housing benefit over collection, former tenant arrears and current tenant arrears. We also have an in-house enforcement agent team. One of the key things that we're sort of thinking about and looking at is particularly in relation to the collection fund and the collection rate, and the emphasis that's put on the collection rate, which is it's sort of an arbitrary measure that's used to compare councils. But what's truly important is the actual collection fund and the collection of the debts over a period of time, and that the local authorities need to be ensuring that the partners that we work with have the flexibility to collect debts in an ethical way, making more of an emphasis on maintainable, affordable arrangements, that customers can then look at changing payment behaviours, and emphasis on ongoing liabilities to ensure that customers aren't put in more financial vulnerability by pushing too hard on arrears cases. And I think it's down to local authorities to really sort of push the approach that we're looking for and push that flexibility, and not ensure or make it very difficult for enforcement agents and insolvency practitioners to come up with the answers for us in terms of collect now, and it needs to be sort of much more considered approach and a partnership between different agencies.
That's excellent. Thank you, Charlotte. Steve, can we hear the government side, please?
Yeah, thanks, Russell. So, as you said, I'm Steve Coppard. I work in the Cabinet Office as the head of the government debt management function. I've actually been working in government debt for over 20 years now. I started off as a collector on the phones for HM Customs and Excise, so I predate HMRC, but spent most of my career on taxation. So looking at this space, you know, I really do believe that compassion should come in at the front end. You know, it should be where we don't assume that everybody on the visit list has done something wrong. And I'm not saying we do assume that, but compassion is about having an open mind and weighing up the situation with a focus on fair debt outcomes for all. And by fair, you know, I mean just and unbiased and free from perception. And I've got some sympathy in this space too. You know, the industry is enforcing a court order. It's an executive partner of the UK justice system. So I feel it's reasonable for enforcement agents to expect payment or taking control to be the outcome. But you look at the FCA regulated space, you know, enforcement comes a lot further down the process. And the cases will have already gone through what I call the coarse filter of analytics and then the fine filter of conversations with skilled agents on the phone to establish if enforcement is the best strategy. And by the best strategy, I don't mean just whether it would be disproportionate to a person's means to send out an enforcement agent. I also mean whether it would be effective. So, for example, we've seen direct earnings attachments be incredibly effective on older debts, council tax debts, where enforcement hadn't been able to yield results, but people could clearly afford to pay. I think where enforcement's used earlier in the process, you know, fewer unsuitable cases would have been excluded and filtered out, which puts additional cost and effort onto enforcement agencies in terms of visits that don't yield results, you know, attempting to obtain debt and mental health evidence forms and so on. And I fully expect, you know, I think the Enforcement Conduct Authority, as it starts to get on with the job of measuring quality in the current process and seeking to improve it, I fully expect some of those upstream issues to be exposed by the ECA. Thanks, Russell.
And thank you, Steve. We've got a number of questions already posed to us in advance, and we've also got a request from Jonathan Shaw from Christians Against Poverty to introduce himself. Christians Against Poverty are on the Enforcement Oversight Working Group that's been designing the framework for the Enforcement Conduct Authority. So, Jonathan, do you want to share any thoughts if you're hopefully on the call? No? Okay. In that case, let's move on to our first question that's been submitted in advance, kind of quite a general one to start with, really. Asking about the definition of vulnerability and who's defined as vulnerable. Do we need to take a different approach to that post-pandemic as we were doing pre pandemic. Should we start with Ed on that one, as that's sort of specific to his area of work?
Yep. I mean, I think when we look at that, you know, a vulnerable customer is a vulnerable customer, regardless of what that vulnerability is. And from our perspective, you know, one individual customer, it can be very different from someone else showing exactly the same vulnerabilities. So it's about looking at each case on its own merits and so on. When you ask whether vulnerability and the meaning of vulnerability has changed over the last 18 months, then yeah, I think it has. I think if anything, it's opened up our eyes to show that actually people who perhaps were perceived as being quite well off 2 years ago, how something like a COVID, something life-changing like that, can actually suddenly make them very vulnerable for incredibly different reasons, whether that's through bereavement, furlough, potentially losing their job and so on. So I think what it's done is really opened up our eyes to, as I say, scratch beneath the surface a little bit, look far deeper into each individual case, rather than just seeing it on the surface. And what we're also recognising now, more than we've previously recognised, is that actually we're able to identify vulnerable customers that may not even class themselves as vulnerable, purely because it's the way they've been brought up and the way that they've been generation after generation. And actually we're seeing that, and actually we're able to provide them a bit of support and a bit of guidance, as opposed to waiting for them to actually shout and ask for help. So that's how I'd say it's differed, and certainly the way that we're looking at it within our businesses is very much, it has to be on a case-by-case basis. There is no right, you will fit into that bucket because you're vulnerable. It has to be done on a case-by-case basis, and that is paying dividends in the results that we're seeing as well.
Okay, Charlotte, is that practical? Can you, given the volumes you're dealing with, can you filter people, you know, individually? Can you take into account all of their individual circumstances in that way? Charlotte, did you hear that?
I'm terribly sorry, my sound when you said who you were asking that question to.
Okay, did you hear the question?
Roughly, yes. So in terms of the numbers that we're actually seeing customers, it is quite difficult to identify vulnerability. And I think that's one of the key issues that a lot of people have. And it may potentially be that the vulnerability isn't identified until an enforcement agent is at the door. And it that we struggle with. And I think one of the points that Ed made, that are now in vulnerable situations that previously wouldn't have potentially been, they're in a well-paid job, they've got their own mortgage in their house, and they're paying their bills, they've got savings, and then they've been hit by the pandemic. People have lost their jobs, they've used all of their savings, they've used credit cards to tide themselves over, and now they're in a situation where they're having to claim, say, universal credit and council tax reduction, and they don't actually know how to claim the benefits. So they're needing support from ourselves in actually identifying what they potentially could receive. And that's where a lot of the income maximisation areas that I know a number of enforcement agents and local authorities have put in place, either pre or post-COVID. But it's, as you say, I think it's very difficult to identify en masse if a vulnerability exists. And I know that the government released the debt management vulnerability toolkit, and there were recommendations in there about using credit reference data, but a lot of local authorities aren't set up in a way that you can pull that information and then use it in an automated in a way that can be done in bulk. So a lot of the situations are happening on a day-to-day basis as we're getting customers contact us. And I think because of the pause that was put on recovery action by a lot of local authorities, a lot of customers then didn't advise could have done. because they weren't being pushed or chased for the debts. So they didn't realise what support was at that time. But again, I go back to what Ed said, it's a one-on-one tailored approach that needs to be taken based on individual circumstances. And I don't think you can really have a one-box-fits-all sort of approach to vulnerability in any way.
Okay, thanks. Paul, in the consumer credit sector and increasingly in the utility sector, we're seeing quite a lot of upskilling, a lot of use of technology to start to sort of define and filter and segment individuals. Do you think that, in your experience, have councils started to do that? Do they have the capacity to do that and the resources to do that?
I think councils absolutely are doing that. I think vulnerability is the most difficult thing to put through an automated process, because I don't think you can. I think data is key at the front end for local authorities to try and focus their attention in terms of where to apply the resource they've got to the cases that there may be a favourable outcome for them. I think data is key for that. I think in terms of vulnerability, for me, it comes down to listening and understanding the customer's situation, the scenario that they're in, because it's generally a vulnerability scenario. There's no kind of prejudging or second guessing how it might impact on someone. If it's impacting them, it's impacting them regardless of what it is. And the key is finding a way to navigate that. We can have temporary scenarios, we can have indefinite scenarios, and all of these things will influence which way a creditor ought to go in terms of enforcement. It's difficult though, because a lot of the vulnerability information is subject to it being given to the client. So it takes the individual to come forward and disclose it, to talk about it. I know there are some options for registers and things out there which are great and we can look at, but there's always going to be the unknown situation, and it's reliant on the engagement with the customer and the creditor, and really listening to how it's going to impact. For me, I don't think we have changed our approach at my firm as a result of COVID. I think we're doing the same thing. We're listening to the situation and understanding how it impacts on the household and how it impacts on the debt. But what we are seeing, agree with Ed and Charlotte, we are seeing a whole batch of people who historically have been off the revenues team's radar, who haven't been in a collections environment. And ironically, we've had it flipped on its head, where a lot of people who have actually had more surplus income. But they've had more surplus money because they have not had so much outgoing. So we've seen a rise in people wanting to pay in certain quarters because they've got extra money available for it, because they're not doing childcare or haven't been, or commuting, socialising, whatever else it might be. So I think COVID's flipped things on its head to a certain extent, but it hasn't really changed how we deal with vulnerability, is my view.
Okay, thanks. Steve, you mentioned the Financial Conduct Authority and the progress that they've been making. Do you think we need for local authorities some definitions and some guidelines around vulnerability, so we get a bit more consistency to it?
I think I'd agree with what others have said, that trying to define vulnerability is probably the hardest thing that you'll ever do. We struggle within organisations, let alone across organisations. And if you look at the central government bit that I'm responsible for, we've got 20 odd organisations. By the time you bring in all local authorities, billing authorities, we're adding over 300 more to that. So I'm very much more in favour of a principles-led approach rather than a product-led approach. I think we need to be careful to remember that vulnerable customers aren't this magic cohort that once we identify them, we can treat them all the same. Vulnerability is transient. It can affect any one of us, and for the length of time is variable. And I think that's why it's really important to have well-trained frontline agents who can pick up on the triggers and make an assessment based on the industry standard tools. Our vulnerability toolkit is one example of that, but look, all we've done is build on the shoulders of giants there, right? A lot of that stuff's already out there in different formats. We're just pleased to be able to bring it together with the sort of permission of some of the authors. I think you also need to remember, not everybody who's vulnerable can't pay. And there are actually people who, the burden of being in debt is actually leading to longer term problems. And we've got a duty of care also to lift those folks out of the burden of debt. we see, you know, some of the great work that Christians Against Poverty does. I know we said we've got Jonathan on the call, and when you see, you know, the debt-free stories that they publish, you know, the absolute joy on people's faces when they've actually been able to overcome this. And I think that's why it is, you know, we should be focusing on, wherever possible, principles over products. And, you know, I think if you're looking at fair debt outcomes for all, and I do mean for all, you know, for the commercial partners who work with us, for the people who own the debt and the people who owe the debt, finding that win-win-win all the way through is absolutely what we should be driving for. And I think if you're doing that, you probably don't need to change.
Okay, I'm going to come to Jonathan in a minute because I know he's available now to ask his question. But just following on from that, a question for Steve and Charlotte, really, around behavioural science and whether the government could do more in terms of nudge techniques to get people to engage with their circumstances and with their debt situation. Steve, do you want to just respond to that, and Charlotte afterwards?
Yeah, sure. So in some parts of government, we're already really good at this. You know, nudge theory has crept out of from being a niche idea quite a long time ago. Now it's getting more and more mainstream. We set up a joint venture in government with the behavioural insights team a few years ago now. And we see that baked into the strategies of the most capable debt resolution businesses within government, because they realise that debt isn't about numbers, it's about people and behaviours and circumstances. Behavioural science, you know, it really allows us to try and get people out of debt rather than just focusing on getting debt out of people. And I think that's the important thing about the numbers. You know, the getting debt out of people is always about the numbers. Getting people out of debt is about the behaviours, which I guess is kind of a long way of saying, yes, I'd like to see it more widely adopted throughout public sector, but also whilst remembering that it's only one tool in the box. It's not a silver bullet. It won't work for everyone, especially persistent non-defaulters or belligerent defaulters, or people who've got their heads totally buried in the sand. It's not going to work for everyone, but there is a cohort that it will work for.
Okay, thanks, Steve. Charlotte, what's your experience of nudge?
Yeah, I think we've adopted some processes within Southwark with different debt types. We had some good workshops with some people that deal with insights, and I think it absolutely is local authorities should be using and taking on. I think it's local authorities that have run pilots need to be sharing the outcomes of those with other local authorities, because running a pilot isn't straightforward necessarily and expensive to sort of so I think if people have found something that works, they need to be sharing that. One of the key things, not actually tried this, but I've heard from somebody else that it works, is just saying thank you to customers for making a payment. Saying thank you to them, it's then sort of giving them and a bit of happy effectively, which then is changing their behaviours about making a payment to us the next time, and it's changing that relationship us, effectively forcing them to and them actually sort of wanting to do it in recognition. So there's so many sort of that we could sort of take on board and do. I just think a lot of local authorities and even can do, but we need to be learning from other financial institutions and even retailers what works for when you're doing something online, and adopt that sort of process and that look and feel of correspondence, and get away from the statutory communications. And we might get, as Steve says, some more sort of interaction, and it's about changing the customer's behaviour.
Yeah, I think that's a really good point, and perhaps the select committee inquiry is an opportunity to make some suggestions that perhaps there's a bit too much rigidity in the communications that we have to have. You know, the notice of enforcement with the block capitals and the red type and all of those type of things perhaps is actually dissuading people from re-engaging rather than encouraging them to sort out their debts and get help, because it's, you know, it is perhaps a bit too officious and a bit too scary. Perhaps you know, if we've got some ideas, then the select committee might be, as well as to Steve, of course, I'm sure he's looking at this a lot, but I agree with you. I think that during COVID, for example, CIVEA members had a template letter that went out to just to let people know that we understood circumstances would change, make sure they knew that they still had their debt to pay, but that we were looking to find out if circumstances had changed and they might need additional support. Because we were able to draft that ourselves, we got a good response from it, rather than having to use sort of quite prescriptive formal documents that don't really help people to feel comforted in any way. And Jonathan, I see you're on camera now. Sorry we couldn't hear you before. Do you want to make your point, ask your question, whatever you choose?
Thanks, Russell. Yeah, thanks for kind of giving us the opportunity to raise this. So I've kind of asked some of our more experienced debt advisors what they'd like to really ask in this sort of forum, and for start, they're just really encouraged just to see that this kind of topic being discussed so widely. So thank you for that. So the question that I got from our advisors that we put together was just really kind of around the volumes of people that agents will obviously go and see. It's kind of unsurprising that enforcement agents will see people that are hoping to abuse that sort of vulnerability label. And often our agents will see a level of, our debt advisors rather, will see a level of skepticism from agents when we're highlighting a client's vulnerability. And often the burden of proof that is then placed on us as debt advisors and on the client is, within such a short window of time sometimes, can be really too much for the most vulnerable. So I suppose my question is about how do firms go about supporting their agents in kind of helping them to appreciate that actually sometimes the rules that we have in place, or the evidence that we need to log vulnerability, is often too burdensome for the most vulnerable.
Okay, thanks for that, Jonathan. I think that's probably one for Ed to start with.
Yeah, I guess so. Hi, Jonathan, good to see you. As you know, Jonathan, what we do, we work closely with yourselves and others. As soon as either we identify a vulnerability or vulnerability is identified to ourselves, we place cases on hold for a period of time. There's always been a little bit of confusion around that, which is where some agents and so on assume you need the supporting documents before you can flag them as vulnerable and put the case on hold, whereas we actually work it the other way. We will put the case on hold to provide that time to get those documents in. We think that's the best practice. Obviously, it gives an element of time where there's no fees, there's no visits, and so on. And we link them together with one of our welfare team champions, so that they've got one person that they can contact and so on. Now, that's exactly the same whether that comes in from either yourselves or one of the other advice agencies, or whether that is something which we've identified ourselves. It gets filtered out into a welfare team champion, and they manage those cases. This seems to work. We have a very good success rate with getting people, once we've had cases identified as vulnerable, getting them into affordable payment plans and so on. And what we find actually is having that relationship on a one-to-one basis where they've got a point of contact within the office, and so they can make those warm communications. We find that actually if a payment can't be made for any reason, they're not afraid to pick up the phone. They know that they can pick up the phone and say, I'm supposed to pay you on Friday, I'm going to have to miss it, this has come up, and so on. So we have those relationships. The relationship which we have with yourselves, you've got direct dial telephone straight into our welfare team, same with emails and so on. And that's the same with all the advice agencies which we work with. And we take your word for it. We, as I said to you a couple of years ago, when we set up this process, you're the experts. Your guys are seeing far more people which are genuinely vulnerable than what we're seeing. So actually, if you're telling us that someone's vulnerable, we will put that case on hold, take your word for it, and give you the opportunity to work with that customer to get us that supporting documents and then build it forward from there. Certainly from our clients' perspective, we know 2 or 3 which have spoken to other enforcement agencies about having a similar approach. And we certainly think it works well. And, we review it, we look at it regularly, but from our perspective, from what I see in the industry, it is a good solution.
Charlotte, do you think there's enough flexibility afforded to enforcement firms by councils when they're contracting with them to allow them to offer that more sensitive approach?
I think of local authorities now in terms of vulnerability enforcement agents to make that decision. I think it's just that goes against the authorities push enforcement agents for collection of the debts, which obviously is the aim. But I think there should all be an indicator to local authorities of the number of customers that are potentially vulnerable, and the value of the debts that go into that as well. Look at taking those cases, performance measures that enforcement agents are sort of measured by or compared by with each other, looking at the cases and the volume and value of the debt separately and comparing those across different enforcement agents. Because if one enforcement agent is identifying a great number of vulnerable customers, then they may think that the other enforcement agents aren't and should be. And I think I agree wholeheartedly with what Ed's saying about local being put on place, and I don't think local authorities potentially much in terms of the vulnerability processes that are followed and the partnerships that are made, but I do think there needs to be a breakdown of some barriers between some and creditors, either local authorities or enforcement. But I think it's definitely something that can be influenced, and it should be part of procurement process questions going forward. That the vulnerability element is a key part of a procurement process.
Yeah. Jonathan, did you want to come back on that?
Well, yeah, just to say, actually, just to support what Ed's been saying, we found that there's a growing number of firms that do want to work really well in partnership with debt advice. I think there's, similar to what Charlotte said, there's got to be, as part of that tender process, but actually at a senior level, that appreciation for what life is like for the most vulnerable people in society who are agoraphobic, struggling with mental and physical disabilities in such a bad way that actually the burden of proof can be too difficult for them. But essentially to see that appreciation kind of trickle through at all levels of an organisation to make sure that people are getting the support. So yeah, just say we are really encouraged to see the way the industry is going in, and really glad to be part of that process, really. So thank you.
Thanks, Jonathan. And Paul, you had your hand up.
Yeah, thanks, Russell, and hi, Jonathan. Good to see you. A couple of things. From a creditor's point of view, there's nothing better than a scenario where someone's properly advised and the advisor is forthcoming with information to help us make a decision. So that scenario where the information is shared and that trust is there and you're collaborating properly is ideal, and that's what we all need to be working towards, in my view, in terms of creditor and advice-based sector. But just coming back to your question, I've picked up on the word volume, and I think there's more issues in triggering that volume. And for me, we've got a huge problem with council tax benefit withdrawal in 2013. Pre-2013, a lot of people will have been exempt from council tax and are now coming through a process where there's a liability. I don't think universal credit works fully well in terms of certain aspects of it. Councils have got pressure to collect. They've got as little resources as they've ever had, and as most expectation that they've ever had. And they're also to pick out the vulnerable people in society and deal with them appropriately. And that is, in my view, impossible. And the more collaboration that can happen, and the more noise at the top end in terms of the benefit issue, because there are people coming through the system that didn't ought to be, full stop. And they are often the most vulnerable. And if they had CTB, then there wouldn't be an issue in terms of their local authority generally. So that's probably as much of an issue for me as the actual how we collect it at the back end or deal with it at the back end, because one solves the other to a certain extent.
Thanks, Paul, and thanks, Jonathan. There's a question's been asked about the breathing space scheme, and I'd be interested to know people's thoughts on whether they consider that's been a success. Has it identified vulnerable people, or has it simply been used to just delay the recovery process? So, Ed, do you want to give your thoughts on that first of all?
Yeah, can do. Again, from our perspective, you know, there was an awful lot of talk about breathing space. It seems to be all I was talking about for 18 months leading up until sort of May or June when it went live. You know, the initial figures that were bandied around were with the predictions and so on. I think there were about 700,000 people in the first 12 months was the figure which was mentioned, and that was based on modelling pre-COVID. From the people which I've spoken to, I've seen very few cases, certainly not to those extents. We've probably had somewhere in the region of 1,500 cases. I think when we look at whether people are using it to buy a little bit of extra time, maybe using it as an excuse to avoid paying and so on, I think it's really hard to tell. Certainly from all those cases which we've had which have entered breathing space, we've had very few proposed payment arrangements from their debt advisors during the breathing space period. But what we have found is that we're able to engage with those customers at the end of breathing space a lot easier. And I can't help but wonder whether there's confusion around all the debts. And actually, in that 60-day period in breathing space, the debt advisors are helping them to align their debts so they understand who the debt's for and so on. So, for example, if we're sending someone a letter, they link it and say, right, this is for this debt from this local authority. So it helps organise them. So although we're seeing very few payment arrangements being put in place during breathing space, at the end of breathing space, we're finding it a lot easier to engage with those people, and they seem more aware of that debt, and we're able to talk to them a lot easier, and we're actually getting significant volumes into payment arrangements, short-term, long-term, and so on, from the back of it. And again, having that sort of approach where they know what we're ringing them about, we know what we're ringing them about, certainly seems to have worked. But as I say, I think that the numbers themselves are, certainly from our perspective, considerably lower than what was expected.
Yeah, I hear that the estimated, they were expecting 900,000 a year, and Step Changer so far processed 22,000. So I think the numbers are way down on what was anticipated. It might go back up again. I don't think we were yet knowing what the impact of COVID has been on problem debt yet. I think it's too soon to say.
And I think that 1,000 modelling was actually based pre-COVID. So we know that there are more people in debts and so on. So in theory, that volume should have gone up. Whether it's a case that people, as we've all alluded to, some people don't know where to get the advice from and the help from. So whether that's played a part in it or not, I don't know. But certainly the current volumes are nowhere near what was expected. Whether that will change, as you say, who knows?
Paul, do you think the scheme has been practical and actually advantageous?
I was always storming a teacup camp with breathing space. I always thought it was something that we needed, but something that would only be applied in quite a narrow scenario, literally that perceived keeping the wolf from the door, put the brakes on things to give people time for breathing space. It surprised our organisation insofar as the cases that have used it are not the ones that you'd expect. I've had kind of grey area try-ons to stop eviction type activity where it's not relevant to, where debtors are only owing to one creditor and no others. It's not your classic need for debt advice. My big hope was that there'd be a lot more solutions for people at the end of it, which I haven't seen myself. But I think that's probably more an indicator that the solutions aren't quite there in terms of what's on offer for people in terms of formal debt solutions. We'll see what happens with statutory debt repayment plans coming down the line, whether that will give the people that currently fall between the gaps where bankruptcy, IVA or debt relief order isn't appropriate, who knows. But my hope was that there'd be more formal debt solutions on the end of it, and we're just not seeing that at the minute.
Okay. I mean, yeah, I think the statutory debt repayment scheme needs a whole lot of work, and we need to look very carefully at what we've got with breathing space before we start to do sort of a breathing space plus scheme, just sort of adding on the statutory debt repayment scheme. I agree. We've had a question, perhaps more controversially, asking how the panel feels about opening up enforcement to the private sector more generally. So perhaps I should go to the private sector firm in the first place. Ed, are you open to more competition from other parts of the private sector?
I mean, I think private sector work and so on. You know, the enforcement industry looks after various different debt types already. It's already established. It's got good ones with things like the CCA coming in as well. I think that if we're talking about more work coming in from the private sector from different areas, I think that there's a good solid base there which could be utilised very easily. But it's a tough call. It is a hotly debated topic, as you rightly say.
I think there's also the question of sort of specialisms as well, isn't there? I mean, enforcement is not debt collection for a reason, and that it requires a different set of skills. And I know there's probably lots of debt collection firms that probably wouldn't want to get into the enforcement sector, and probably vice versa. You know, when you're looking at individuals, for example, we know that some people who have no disposable income have a wealth of assets, and it's for the enforcement sector to sort of be able to be more discerning about that type of thing. And I think probably as part of this debate post-COVID, we're going to have to look very carefully at all of the work that we do up front in order to avoid visiting the wrong people, and perhaps more of that, as Charlotte was saying, sort of making sure that we filter the right people so that the wrong people aren't going in volumes to enforcement and then leaving into the enforcement sector to work out the muddle of who needs enforcing and who needs referring back for additional support. We've got, how much have I got? A bit more time, Gerard?
2 minutes, sure, 2 minutes.
Okay. So last question then, to sort of circle it back to the sort of title of this. Can you be compassionate only with people that are genuine at setting their debt, rather than a customer who's deliberately being evasive or persistent in missing payments or making excuses for not making payments? Is compassionate enforcement actually something that can be realised beyond post-COVID? And I'll go across the whole panel to start with that. Shall we start with Paul?
For me, on that, you can be compassionate with anybody, and you know, you can offer it to anybody as your starting point. I think that should be the starting point. The case will then go where it goes, but for me, it's all about finding Steve's win-win-win as quickly and as cost effectively as possible. You should be able to do that compassionately, in my view. But obviously, when you're speaking to people like me at the kind of hardcore back end of the process, I'm dealing with a different kind of person. You know, it's quite normal for me to see someone with £300,000 worth of equity and a 25 grand council tax bill. You're going to have a different process with that person than you are with somebody who can't afford to feed their children, in terms of the way that you approach their debt. Is that's my view of it. But compassion is something that it's a human quality, isn't it? And it's something that you can be with anybody.
Thanks, Paul. Steve, I guess you would agree with that?
Yeah, absolutely. Look, there's depends where you position yourself, right? So if you're going to talk about being compassionate with people, some of the most compassionate people I know are the ones who set boundaries and actually, you know, really understand what it is that they're about. So if somebody is persistently defaulting and you know, they're robbing Peter to pay Paul, at some point in the future they are going to find themselves in a very difficult position. So is it not compassionate to actually try and change that behaviour now and put them back on the right path, rather than allow it to get to that stage? And that may be something that looks akin to tough love today, but actually in the grand scheme of things, you may just have saved that person a world of hurt.
Yeah, absolutely. Ed?
Yeah, quite agree with both Paul and Steve, really. I think you know, we should be compassionate with with all customers, regardless of background and so on. There does come a point where you have to draw a line in the sand. You know, if they are constantly defaulting and not making the payments on time and so on. But again, as Steve said, actually, if we're finding people are defaulting for genuine reasons and aren't making those payments, then we look at what the arrangement is. We look at how we can make it something that's affordable, because if they're struggling with us, then they're probably struggling with a lot of other payments as well. So actually finding that balance, which you know comes under the compassionate header, and actually we don't want to have to keep contacting customers because they're struggling. We want them to get them into an affordable arrangement, and then we can let it manage itself and so on, and let that process continue. And that way we know that if we hear from them, it's because there's a genuine problem, not for what could be perceived as an excuse. So yeah, I think, you know, compassionate, definitely, but with some guidelines and looking at our processes to see what we do if those guidelines are crossed.
Thanks, Ed. Charlotte, you've got the challenge, haven't you, of you've got to recover arrears to be able to fund local services, especially those services that support vulnerable people, while at the same time making sure that you're, as you say, getting people out of debt, not getting people debt into people. Well, I can't remember what it was, Steve's favourite phrase, and I just messed it up. I was rehearsing it before then, and then I kind of ruined it. Anyway, I think you got the general idea. But my point is, there's a difficult balance. There's a dilemma there. Is it possible to exercise compassion and recover enough of the debt that's outstanding?
Yeah, I think as the gentlemen have already said, the way we deal with collecting debt can be done in a compassion, even if you are being more forceful in terms of the actual recovery and collect. The thing for me is more in the question about whether as a customer is safe or not, and that is the key thing that's very difficult to identify. Somebody may be persistently not paying arrangements that they make with us, are desperately trying to balance things, and they want to engage with us and they want to agree arrangements, which they do, but then they can't actually maintain them. It's down to us using different data and information that we can obtain from credit reference agencies to see what position that customer is actually in, and whether they are truly struggling or whether they're being evasive. To start off with, they can look the same, and it's not until you can build a relationship and build the trust with a customer that they can then actually feel that they can admit to some of the issues that they may be having, and actually ask for the help that they need, that we can then support them into manageable arrangements and hopefully at some point be debt free.
So getting people out of debt, not debt out of people. Got there in the end. Important point to make. And I think just to sort of, wind up this, I talked at the beginning about, maybe we need to reimagine how we do public debt collection. And perhaps we're not starting from a blank sheet of paper. From what we're hearing this afternoon, there's an awful lot of work gone on. And I hope, the huge numbers of people that have taken part to listen in have also got their own thoughts. And I think it's perhaps what we haven't been is very good at telling people all of the things that we're doing, quietly doing it to us with, in our own silos and behind the scenes, and doing all that we can. And perhaps we need to start to influence some of the perceptions. Things like the select committee inquiry is a good example, the policy that we're feeding into Steve and the Cabinet Office team, and sharing this best practice so that people can see that what we have here is an evolution and not a revolution, if you like. The work is going on. We just need to tell people about it so that more people can do it. I'm sure we're going to have more debate around this, because, as I said, this was really just to start this whole debate, because I think post-COVID it suddenly takes on a whole new imperative to do quickly. But we'll leave it there because of time. Gerard, do you want to kindly introduce our sponsor, please? He's gone off for a
I think Gerald's got Russell.
Has he?
It's Paul from CCS.
Right. Okay, Paul. Then, perhaps you'd like to introduce yourself. We're really pleased to have you here.
I will do. I'll just share the slides if I may. Hopefully you guys can see that. So, good afternoon, everyone. We're delighted to sponsor today's webinar on compassionate enforcement. I'd just like to provide you with a 5-minute segment on the importance of digital engagement within the credit and collections environment. So we are Complete Communication Solutions, CCS for short. We're a UK-based digital contact solutions provider, formed in 2003 and got over 17 years experience in the collections sector. We provide services worldwide, UK, Europe, North America, Australia and New Zealand. Our accreditations include ISO 27001, Cyber Essentials, G-Cloud and the Credit Service Association supplier member status. In 2019 and 2021, we were the Credit Collection Tech Award winners, 2019 for being Best Customer Engagement Solution and 2021 for being the Best AI Tech within Credit and Collections.
Thanks, Paul. I appreciate that, and we really appreciate your support for this. And actually, we've got a question here that perhaps you might want to take part in. I can also put to the panel as well, from Chris Boyler, saying that local authorities have for a long time asked the DWP, HMRC for more data to take a more effective collection practice and avoid the sharper end, but they are still waiting. Now, I know we've got the Digital Economy Act provides opportunities there. Steve's got his hand up, but Paul, as you're already speaking, do you want to just share your thoughts about the use of data and how that's going to support public debt collection going forward?
Sure. I mean, we are obviously more involved with the data regarding contact customer engagement data, so email addresses and mobile data. And I think one of the areas that we've seen is perhaps the capture of data for around mobile numbers, etc. Perhaps hasn't been as clear cut as it could have been. Potentially something that's happening over in the private sector, where there's a huge importance to collect that information and communicate by that medium.
Yeah. And I see that you've got your slide up there about using digital contact for collections.
Sure. Yeah, absolutely. Well, obviously, as we all know, communication is the key to providing any sort of satisfactory outcome for anybody involved, whether that's the consumer or the organisation. And what we're seeing with the rise of e-commerce shopping, the fintech organisations in the energy and banking sector, and changing working practice, customers just want more choice. They want to choose when and how they communicate with organisations. There's the buzzword that everybody expects on demand. Well, what do we mean by that? Well, consumers require convenience, speed, choice, anytime access, no pressure engagement, a low friction and easy of use option with some sort of self-serve solution. What we're finding is service can be made a lot faster and more efficient with the use of artificial intelligence through conversational chat. And AI can help to quickly identify vulnerability with natural language analysis and intent metrics, so we can channel the customer to the right support function that they need. It also helps employees to be more efficient and productive. Digital services do provide a quicker user experience, so where an agent can typically handle 6 to 7 customer inquiries digitally, they might in the same time only be able to handle 1 telephone call. So there are resource benefits. A large UK-based operation within credit and collections in the private sector conducted a survey earlier this year into consumer communication preferences, and 89% of the consumers that they polled suggested they prefer to communicate with organisations via messaging. I put this down to a change in communication methods driven by Generation Y, aka the millennials, who are now forecast to make up to 75% of the workforce by 2025. Within retail and brands, The top 3 communication methods are now 47% being text message, 21% being Facebook Messenger, and 18% being WhatsApp. Anecdotal evidence is suggesting that the use of voice calls for mobile phones is massively on the decline. O2, the mobile network, did a poll in 2020, and the joint 5th application of using a mobile phone was actually making a telephone call. Number 1 was to send a text message, number 2 was to read a text message, and number 3 was to read personal emails. So the mobile phone is no longer really being used as a phone. Services that have been utilised in credit and collections already are text messages, and they break down into 3 parts. Your number 1, your basic text message, your call to action, your notification content, please give us a call, please go to this website, for example. 2-way text messages where you can engage in conversation with the consumer to agent and organisation. And feature-rich text messages where you can send rich content, whether that be secure documents, bespoke and personalised customer journeys featuring documents, payment capture, income and expenditure forms, CSATs, etc. And then you have conversational messaging. That's where you're linking in web chat, live chat, text message, email, and the social media, WhatsApp, Facebook Messenger, Twitter, etc. Earlier in 2021, with the help of Gerard and Credit Nation, we conducted a poll into the challenges and moving into the digital space. 3/4 of the firms believe that paper comms are now a thing of the past. Chatbots and AI is the way forward. There was a little bit of a lack of clarity on precise budgets, but from the poll, annual spends of £250,000 were not uncommon. And 85% of the firms had accelerated digital communication technology post-lockdown. So it was very much on their radars, but with the pandemic, it sort of accelerated plans. SMS and web chat being the most popular options. However, finding the right partner, the cost and the time to implement the solution featured as the main challenges. So what can we do? Well, we can help you navigate digital engagement, offering services on a no capex, pay-as-you-go model via our 2 SaaS platforms. Mailmaster, which will help with secure digital document delivery by text message and email, basic SMS and rich SMS content, and OmniReach, which centralizes and manages all non-voice communications with or without AI options. Very brief example of what a feature-rich SMS is. This is where you can create a personalized branded mobile journey for your customers, offering a range of self-service options that push out via text message, complete with IDMV secure authentication. OmniReach is a conversational platform. It's a gatekeeper to all your non-voice communications. It can ensure that the right team receive the right customer contact. It allows straight-to-agent conversations or chatbot for the more frequently asked requests. In the first half of this year, for the first 6 months, OmniReach AI has resolved 27% of all interactions with a single line response and 42% without live agent involvement for our current credit and collection customers. CCS, we simply just remove the barriers, no capex, no dedicated API development, no contract. It's a pay-as-you-use solution where we can create numerous digital touch points with proof of concept trials available. Thank you everybody for your time, and we hope that you will consider CCS when you embark on your digital journey.
Thank you, Paul. I hope that people can hear me now. Russell, can you hear me?
Yes, I can, yeah.
Okay, sorry about that. I seem to have temporarily fallen out of my own webinar, which is a bit embarrassing, but I'm sure you had a great time. Thanks also to Paul from CCS. I mean, we've got about 10 or 15 minutes left in this session, so I think I just want one final whiz round the panel and just take a very general lesson sort of moving forward, if we may. What I want first of all is this word from the street, starting off maybe with Paul and with Charlotte. What's your feeling right now of the state of play of the economy? Are you seeing maybe on the legal side more applications for payment plans all the way up to IVAs? Is this something that's filtering through? And then just generally in the sort of the streets and boroughs of the great borough of Southwark, Charlotte, what is the feeling on the street at the moment amongst the general public about the way things are going to play out for the next sort of 6 months or so? So maybe Paul first, if you'd be so kind as to pick that up.
Thanks, Gerard. what we're seeing is we're seeing a rise in corporate insolvency. There's a steady rise in that. Personal insolvency is still down, and that's mainly dictated by IVA numbers been low and dropping. We're seeing a return from particularly the commercial sector to going down the legal route. CCJ claims and the new winding up order process effective from the 1st of October. And that's probably our main growth area in terms of a particular work stream. Ironically, in local government, the biggest debt stream we're seeing an increase in is collection of adult social care debt in a time when you would expect things to be, or that to be way down the list. I think most councils who've got that as a responsibility realise that that's part of the biggest hole in their budgets. So adult social care collection, I'm getting lots and lots of requests for support around collection of that debt. But generally, I think we've been waiting with bated breath for this from a personal insolvency space, everything dropping off a cliff edge, which we haven't seen, in my view. We're still quite early since furloughs ended. The kind of demand for debt advice projected at 200 to 300% at the start of the pandemic, I don't think we've seen. Personally, I think we'll see more problems in the corporate space. I think the corporate space and corporate insolvency will happen much quicker than the personal market.
Thanks for that, Charlotte. Does that chime then with your sort of feeling then from Southwark? There's some sort of tension, obviously, but people hopefully are prepared and can pull through. What's this current sort of feeling?
Yeah, I think actually hit the cliff edge yet. I think last month was the start of it, with the UC uplift being reduced, but with the different funds that have been available and the housing support fund that's now available that local authorities are looking to distribute, I think there is sort of support which is delaying that cliff edge effect from happening. I think we are seeing a significant increase in the number of customers claiming universal credit and council tax support. With council tax support, lots of local authorities will put additional comms in place before the statutory reminders. So it could be a few years before the impact of that is seen by enforcement agents and insolvency practitioners. We're seeing an increased number now of customers seeking debt advice. The debt relief orders, IVAs that are coming through are increasing, and they are for smaller levels of debt than previously. And also breathing space, whilst it has been slow, is creeping up each month. And just looking at some stats, 46% of the ones that we've had through have a council tax debt. And they also have up to 5 other debts with other departments within the council. So I think the level of indebtedness within the borough is increasing, but we're working in different ways to try and engage with customers, particularly looking at the pandemic as a health issue. We're working with some partners and GPs to actually try and target support for people with health conditions that we can then look at putting into a local hold.
Okay, that's all interesting material. There are some serious issues there, I think, and we wish you all the best with handling those as we move forward. Just moving forward then to the other two panelists. What I want to sort of ask is philosophy and policy moving forward. Just Steve, from the Cabinet Office, what is the extent of, to what extent have we got joined up thinking there in government to try to pull the economy through as best as we can? I mean, I'm sorry to sort of put you on the spot a little bit because you just the Cabinet Office, but the Cabinet Office is the sort of hub, isn't it, at the centre of government? Now you've got business, you've got digital, you've got communities, you've got education. Our departments sort of working together as well as they might to find a clear way forward through into next year.
Yeah, thanks, Gerald. So there's definitely a joining up. The processes that we have force us to be joined up. So we do see that. We do, from a debt management perspective, we do influence through processes like the spending round and the budget to try and ensure that something that's happening in one part of government is also then linked up to something in another part, that we're not duplicating, that we don't have policy divergence. And, you know, I think the thing for me at the moment, certainly in the debt space, is that, you know, continuous improvement is hampered by having operational processes laid into several different sets of legislation.
Yeah.
You know, for me, the principles of managing debt should be exactly the same as whether it's publicly or privately owned.
Yeah.
Because
sure.
it's what we need to look at is the citizen at the heart of this. And if you're in debt to multiple people and you've got 5 different sets of rules to try and follow for each different debt, that makes it incredibly difficult. And, you know, I think if you apply that principle to the rest of government and where we're going as well, you know, the policies are linked up. Could we do it better? Well, you can do everything better, right?
Sure. Thanks for that. I'm going to ask Ed a question about technology and the sort of uptake of technology in the enforcement industry moving forward. But let me just come back with one quick one, Steve, which is, what, if anything, can the credit industry, the enforcement industry do to help you in the Cabinet Office to do your job?
So I think that the industry already does an awful lot to try and help me do my job. You know, what we're looking for all the time is best practice. And we find the hotbed of best practice is largely in private sector, because they have to innovate in order to survive. You know, within government, we do it because it's the right thing to do, but we're often slower about doing it. And there's also a scale, right? So if you look, 95% of the debt owed to central government sits in 3 departments. So when as you go down that scale, there's less appetite to invest in upskilling and capability in a department that has far less debt.
Sure.
But COVID's changing that, right? So we're going to see probably more debt landing with bays now, for example.
Right, okay.
Sorry, Gerard.
What are those 3 departments? Sorry.
Oh, so it's HMRC, DWP, and HMCTS, Court Service.
Okay.
So, you know, outside of those, what we need to do really is to set the foundation so that we can roll out that capability whenever it's needed. And I think that's where we got caught short in the pandemic. But actually, you know, we collaborate all the way across the industry, because we don't see this as a government problem. It is an industry problem, and we all need to be talking to resolve it.
That makes sense. Thanks for that. Right, Ed, I mean, we've been talking a lot earlier on about individualization of debt and treating everybody on their own merits in quite a sophisticated way. Do we think we're getting it right at a technological level? Is the technology, is the sort of maths of enforcement as sophisticated as what it should be right now? Or do you see some developments in the short to medium term?
I mean, what I'll say within enforcement, I mean, we are constantly investing in technology. We're constantly looking at new processes and methods and so on, and trying to be more efficient when it comes to collecting on behalf of our clients, whilst also having that sort of empathy with those vulnerable customers. You know, within enforcement, every enforcement agency's got propensity to pay modelling and so on. But the way I look at it is it's what you do with that data which makes the difference. Because if you're just comparing postcodes and data which may be 3 or 6 months old, a lot has changed, as we know, in the last sort of 3 or 6 months. You know, we think that actually around all of our customers, but particularly the vulnerable ones, what they're finding, as we've all touched on at the moment, is that we're seeing a lot of people which wouldn't 2 years ago have been needing help, needing support and so on, and classed as vulnerable. And actually what we're trying to do with the use of technology is actually take down some of those barriers, because there's a lot of people out there which actually we do identify on the doorstep as being vulnerable, and part of it is because they're afraid, they feel too much shame to reach out for that support and help, and technology can help with all of that. By taking down those barriers, we can allow people to contact us and communicate with us through different methods and so on than the traditional, right, you must pick up the phone between this hour and this hour. And they can actually, you know, reach out to someone, or even you know, to an automated process in some instances where it takes away that any shame that they may feel. I mean, what we certainly know from dealing with vulnerable customers is they feel that they're the only person in the world that's in this situation. and we need to take that away, and technology certainly plays a big part in that. So keeping the new technology coming in, looking at what's available in the market, and it's changed no end and continues to change in the same way that if we look at our own mobile phones compared to what they were 10 years ago, and it's those sort of changes, and it's something we invest an awful lot of time and money in, and will continue to do so.
Thank you. Finally, Russell, I can't resist asking you a question about the way in which you think ECA, the new Enforcement Conduct Authority, is going to sort of roll out for next year. I think the launch is due, was it March or April time? What realistic difference, practically speaking, do you think that this is going to make to the enforcement industry?
Yeah, well, I think it's going to help us to maintain higher standards. I think it's going to help us to be able to communicate better the good work that is happening, as Steve was talking about. Also to share best practice and perhaps look at trends in a sort of holistic way that perhaps we haven't been able to do because we haven't had the data sets, collections and analysis and things like that. And so that not only is it sharing best practice, but it's also suggesting ways that enforcement can be better, and it can be smarter, and it can be more responsive to the changing circumstances that we've been talking about through this session. So I think there are two parts, or three parts to it really. There's the oversight and monitoring of current standards. There's making sure that we're communicating all of the work that we are doing, so that those people who are concerned about problem debt understand where the problems lie and don't just sort of make assumptions, and perhaps based on some misinformation or just us not communicating enough. And then there's the piece around sort of policy development and influencing policy as we go forward, recognizing that post-COVID we have to look differently at public debt collection.
Okay, thanks for that. I do apologise because I did drop out of the session at one point, so I lost some of the questions. There's just a couple of points here on the right-hand side that I can see. Helen Fitzgerald, access to credit reference data also has GDR limitations, reuse, and the accumulation of excessive data. I guess that's just a point to absorb rather than a particular question. Maybe Ed, is there anything there that you might want to add to that? Can you see that point?
I can't see the point, but answering how you just read it out, I mean, I quite agree. There is limitations, obviously, with that data. It makes it tricky with what we're doing, but essentially we can only use the data which we can access and we're entitled to use and so on within the regulations. But if the data is there and usable, then we should definitely be using it. I think is the key thing to come from that, rather than potentially skipping over what could be valuable information.
Thank you. I hope that at least addresses it. And then I think the final question then is from Simon Smith. I do apologise for anybody else that's asked a question and it's not been addressed. But Simon Smith asks, do the team feel that with the impact of COVID, we have reached the tipping point in affordability of council tax for a larger proportion of residents, especially with the variation in levels of levy and CTB support across LA boundaries? So let's just sort of whiz through that. I'm looking at my screen. Steve, I'm putting you first. Do you want to sort of pick that up?
Yeah, to be honest with you, I don't think we've actually realised the full extent of the tipping point yet. So there's a lot that will start to come out, I think, over the next year or so. We're only just at the end. A lot of the initial schemes that were put out. People have been able to take holidays on their credit card payments. They have been putting debt in. We've seen this through CRB data, funnily enough. And I think the real bite is yet to come. But it will impact broader than just council tax for sure.
Charlotte?
I couldn't agree more with Simon Smith. I think it's been building for a period of years, as Paul has already stated about the CTR as opposed to CTB, and a lot of local authorities have sort of been effectively parking those debts where they know the customer really can't afford to pay, but those debts are increasing and increasing. And I think the last 18 months has pushed a lot more people into that affordability issue. I think another to make it worse over the coming year is the and the liability order hearings. A lot push their council tax support customers. They will then be receiving summonses for maybe 2 years worth of council tax in one go. That potentially is going to happen to or even the start of the next financial year. So I think it is just a problem that's building and building.
Okay, Ed?
Yeah, I quite agree with what Charlotte's saying. I think not just with council tax, but with all debt types, as Steve said, people have had payment holidays and that sort of thing, and essentially have sort of kicked the can down the road a little bit. And now it's starting to catch up with people. So it's going to be a tough few months and years potentially for a lot of individuals, and it's something we all have to be aware of.
Paul, last word for the lawyer, please.
Thanks, Gerard. One thing I would say that we've not touched on is that for me there needs to be this acknowledgement that people living in a council area can trigger a liability, and I think it's dangerous when we compare the person who owes money to a council compared to the person who owes money to an FCA regulated lender, for example, because it is a completely different scenario. The council doesn't pick its customers for many of its debts. And I think when you've got that kind of understanding, plus the fact that the council have an obligation to do something with a number of those debts, you've got, it's no surprise that I'm a ambassador for Bring Back CTB, but then you've got insistency with council tax reduction across the country in terms of numbers. I think it's just perfect storm territory. And I think until we get some consistency further upstream and some solutions, then I agree with the point that it could be the council tax issue that triggers the cards tumbling down, because people can't control, to a certain extent, their liability for council tax. It's there.
Okay, good luck with that. Russell, there are last words. I'll give you the very final word as the co-host for the event.
Well, I just want to say thanks to everybody. Thanks to the panelists. And thanks for everybody who's joined in this conversation. Re-echo my urging you to submit evidence, submit all of the good stuff that you're doing to the select committee. We don't want a select committee inquiry that just becomes a bashing exercise. We want the select committee to come out with some excellent recommendations based on what it's learned about the best practice that's going on at the moment. And perhaps there's even an argument that we need another forum specifically for local authorities to share best practice on this particular sort of post-COVID collection topic. But thanks very much to Gerald for arranging this event, all the technology behind it, and then how it's all worked. And I hope it's provoked more conversation.
Yeah, thank you, and thank you also to CCS and also to Anna and James on the technical side who've put all this together. Does anybody want a final thing to say, or has everybody said their piece? Okay, I think we're done. Thank you also to all the attendees. We've had some great feedback in terms of attendance and registration for the event, and I wish you all a great rest of year and through into next year. All the best to you all.
Thank you.
Bye-bye.
Cheers.